Hi, I'm Mike, and today we're going to talk about how to fund the purchase of your franchise. Hey, if this is your first time here, don't forget to hit the subscribe button below so you don't miss anything. So you found your dream franchise. The big question now is, how do I come up with the money to pay for the franchise fee? Well, there are several solutions to coming up with the franchise fee money, and probably the most obvious is the franchisor himself. Does your franchisor finance at all? You may not think so, but it doesn't hurt to ask. Particularly if you're in an area where that franchisor wants to do business, they may bend the rules a little bit and help you out. They could break up the franchise fee into several smaller bite-sized pieces. That would be helpful, right? Instead of coming up with a bulk $50,000, maybe they break it up over a monthly payment for many months. That would help, right? You might also ask them if they will outright finance the franchise fee. So you would make a down payment and they would receive interest, or maybe they wouldn't. Depends. If you're in a great area and they want to be at, they may not charge interest. It's all about asking the franchisor what they're willing to do. Some won't do anything, some will do a lot. Somewhat of a more difficult way to finance is through a commercial bank. They're going to want a substantial down payment. They're going to check you out head to toe, look at your credit, look at your stability, look at collateral, what you have to put down in case the loan defaults, and how are they going to get their money back. You know, a franchise is still considered a new business, even though you're following a proven system. You are a new operator, and so they want to make sure that you're a qualified person and that you've got the experience and the history of making payments. Now, following bank loans are SBA loans. SBA loans are helpful because they absorb some of the risk that the commercial bank is making, and they're still going to check you out head to toe. Generally speaking, a minimum credit score for SBA is probably in the range of 680. That could change depending on many factors, but the rates are very favorable, but they're not always easy to get for a brand new person in business. And like I said earlier, a franchise, even though it's an experienced system, is still considered to be a new business. So you, the operator, are going to get checked out head to toe. There also are alternative lenders out there. These are in the past have been known as hard money lenders. These are investors that charge a higher interest rate. They're more convenient. They make loans much faster than a bank or the SBA. They're not going to check you out as thoroughly, but they're going to take plenty of collateral to make sure that they're covered in the event of a default. Finally, probably the easiest and somewhat riskiest way to go is friends and family. It's always risky asking friends or family for money. I've stayed away from it, but depends. You know, if you've got rich Uncle Joe and he's dying to help you out, you might explain the risks of the business with him, and if he's a smart guy, he'll want to look into it with you and kind of safeguard you. But friends and family, fast, fairly easy, but risky. I mean, you don't want to lose friends and family, or do you? So to summarize then, the two most likely lenders for your new franchise are likely to be the franchisor himself and your friends and family. So get out your begging hat and see what you can get. Hey, I hope this video helped you out. If you have any questions or comments, leave them in the comment section below. Don't forget to hit the subscribe button, and we'll see you next time.